Welcome to ForexTV.com. Today is Friday, October 24th. I'm Kathleen Reddington with your New York Forex Market Buzz. The yen has hit a 13-year high against the greenback as the carry trade unwinds. And now for a look at the latest headlines from the CEP News Desk. In an unprecedented meeting, OPEC slashed production output by 1.5 million barrels per day in an effort to slow the sharp decline in crude oil prices. The measure will take effect on November 1st. Since the peak in July, crude has declined as much as 58%. U.S. existing home sales rose more than expected to an annualized pace of 5.18 million units in September. This is a 5.5% advance in the month. The UK GDP contracted 0.5% from the second quarter to the third quarter of 2008. While expecting the economy to contract, economists had forecast a less pronounced decline in the GDP of 0.2%. And global stocks were slammed on the overnight, with Japan's Nikkei 225 average losing 9.6% to end at 7,649, a closing level that hasn't been hit since April 29, 2003. The UK's FTSE 100 index sank 6.9%, and the pound slid the most versus the dollar since 1971. The pan-European Dow Jones Stock 600 index dropped below 200 for the first time since mid-2003, slumping 7.5%. And now, here in our studio, Forex TV's Tim Kelly will be joined by FX Bootcamp's Wayne McDonnell.
Hi, I'm Tim Kelly. Today I'm joined by Wayne McDonnell, best-selling author and FX educator. Welcome, Wayne. How are you?
I'm doing good. Thanks for having me.
It's good to have you on a day like today. We talked a little bit earlier, and with these wild volatility swings, probably the biggest swings we've ever seen, certainly in our lifetimes. I want to get your sense as an FX educator. First, where you see this market going right now. What is a trader to do from here? And, how do you cope with these kind of swings as a trader? I'm sure a lot of people, what you're about to say maybe came a little too late, maybe about 12 hours since, I guess, 2 o'clock when futures gapped down. So why don't you tell us a little bit about how you would advise somebody in a situation like today?
Well, today was amazing. I was sitting in front of the charts at 3 o'clock in the morning, New York time, and pound yen started falling, pound Swissy started falling. In fact, almost everything started falling. Even though the numbers, hundreds and hundreds of pips per minute were pretty scary, fundamentally speaking, this was, about to happen. There's been a lot of bearishness, let's say, with the British pound. And then this week, suddenly, there's proof now that the British economy is contracting. So there's sort of this long-term fundamental move at play. Today was just technical levels being broken out. Maybe stop losses on hedge funds were being broken. So today at 3:30 in the morning, when I watched the pound yen break through 150, it went to 149, 148, 147, 146, 145, really, really fast. In a matter of minutes it moved.
Well, the smile on your face tells me you were on the right side of those trades.
Yeah, which is really interesting. So, I mean, the numbers are huge, but there were just technical levels that were broken that we had our eye on. The professional trading world had their eye on these technical levels for a long time. This morning was sort of a perfect storm that created them. So we broke through a technical level, let's say like 150 on the pound yen, or the USD yen hit a 16-year mark. These are very technical levels that are very important. But fundamentally, we've been moving toward this for weeks and even months. So right now, it's the numbers are big, but it's not really a surprise. We have fundamentals and technicals pointing in the right direction.
Okay.
Now, trading them is another matter. It's difficult when it's moving like this.
Before we go on to trading them, I understand that, and I'm going to press you on that. I'm going to ask you anyway. In terms of those technical levels, you think there was no I shouldn't say there was no follow-through, but there was not a commensurate follow-through on U.S. equity markets in today's trading on that drop in S&P. Is that necessary? Because right now the currency markets are pretty much tied to the equity markets.
Yeah,
globally.
Absolutely. Yeah. Well, when I was trading this morning, I did have to get on an airplane and fly out here for this interview. So when I was trading at 4 in the morning, 3, 4, 5 in the morning, the S&P 500 actually was, as far as futures, they stopped the trading. It actually dropped, and then stopped. So maybe those brakes that the industry puts on, maybe they work, but really what's happened is if you watch the 10-year T-note, it's been skyrocketing, which shows that the Japanese yen would be gaining strength, and that's why I spent a lot of the morning buying the Japanese yen. What happens to the actual cash stock market when it opened? Well, I was actually on an airplane when it happened, but maybe those brakes that the industry put on worked.
Well, there are some say that and I don't want to get too deep into the equities markets, but it is pretty important that a cleansing is necessary, and perhaps those breaks, are just slowing the inevitable, or perhaps even compounding that, because a lot of folks believe that we have to go to lower levels here to cleanse, so to speak, the system.
Well, and there's multiple traders too. So what about the guy that wants to buy and hold for 10 years? Like maybe a mutual fund versus the guy that just wants the stock market to rally one more day and then he's going to short it again tomorrow. So there's different types of people playing in this market, and that's why it's so volatile.
So where to go now? What are you in the market right now? Are you?
I trade the S&P's 500, the Dow, but I don't buy any individual stocks. But it is earnings seasons. Earnings are coming in, and that's why maybe another reason for the stock market to just be tanking. And again, so it's sort of a perfect storm. The treasury markets are moving, the equity markets are moving, and commodities are falling. OPEC is actually cutting their production levels to prop up oil prices. Well, that's not good for the economy either. So
it may not work either.
It may not work, but they're actually doing something that could possibly harm the U.S. economy. So, what an amazing week, but fundamentally, all of it really does make sense.
Right. Okay. So, currency-wise, tell our viewers here, maybe a little bit sage advice from one of the best-known educators in the business by our standards. What would you advise folks to do? Yen, we're seeing 13-year lows. We're seeing, a couple of year lows in euro. Across the board, we have issues.
Well, euro is, if you go back a few months, or let's say till about summer, it was way overbought, but there was a reason for it. No one wanted to buy the U.S. dollar. And so it was we were looking at 160 for the euro USD. Well, it was overbought. It needed to come down. The British economy, the Bank of England was actually lowering interest rates, so there's a lot of reason for that to come down. And the pound dollar and the pound yen, if you just go back 6 months to a year, it's come down an unbelievable amount. But that's all fundamental. So my advice to someone that is trading is to develop a longer term bias by really starting to understand the fundamentals, things like global money flow. What the we were talking about this earlier over lunch. How important it is to watch the stock market if you're a currency trader.
You can't trade really if you don't have an S&P live feed, right?
Well, you want to know where the money's going, because if you're in the business of buying and selling money, you want to know what they're doing with that money. And currencies don't change value unless the money exchanges across borders. And so, is the world pouring money into the treasury market as a safe haven, or is the world getting aggressive with their money, buying the stock market here in the United States, or maybe putting money overseas? So right now the dollar's been very, very, very strong. And a lot of people say to me, well, the economy's tanking, the stock market's tanking. Why is the dollar so strong? Well, there's several reasons for it. Again, the other currencies need to come down. The pound and the euro were way overbought. But when you look at global money flow, money is coming into the United States as a new safe haven. The United States economy is bad, but it's still the big boy in the world. Decoupling theory, I think, is falling apart. And the biggest thing, though, most recently that really has helped the dollar is the FDIC raised their insurance level from $100,000 to $250,000. So if you
little security blanket.
Yeah. So here's what happened.
Good
though.
Safe haven play.
What happened is people decided to cash out of their mutual funds and stick that extra $150,000 now that they could have insured, put it in cash. But also, if you're in China, if you're in India, if you're in Malaysia, foreign money is leaving those countries and coming back to the United States. So that again drives up the dollar. But then those investors realize that maybe their banks aren't so good either, and they trust the American banking system more. So suddenly now they can park their money in a U.S. bank and have $250,000 of it guaranteed by the U.S. government. So
it is guaranteed income at a low rate, but it's guaranteed.
But it's better than losing it. even though the U.S. economy is having tough times, it's the best place in the world to park your cash, and that's why the dollar's so strong.
Okay, so tell me, do you subscribe to? I want two more quick questions.
Sure.
One, do you subscribe to the view that is pretty widely held that also the U.S. was the first into this morass and it will be the first out of it, and you know, the euro going south and sterling going south, which really drags everything else down with it, and yen just as the benefactor of the unwind of the carry trade.
Right.
Do you believe that it's also the projection or the view that the U.S. is going to be the first out of this?
I really do believe so. So if you take a look at our problems here in the United States today and you match it to what happened in Japan 12 years ago, it's very, very, very similar. It's really interesting. And, you know, Japan just admitted, just like 2 months ago, they just admitted that they're in a recession.
Right.
It's unbelievable.
Right.
America is strong. Yeah, it's America is very strong because once they realize a mistake has been made, no matter how big the mistake, they'll take the bitter medicine, they'll do whatever it takes, and in this case, print money like crazy, bail everybody out. And then get back to business, which so that makes America very, 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 very strong. And you can see it though with the money flow. The dollar is strong because things are bad, but it's still the best in the world.
Right, right. Good point. That's a very good point. So, with all this on the table now, I appreciate your insights. We're going to see a correction. We're going to see a little bit of retracement. Talk to me about. Do we snap back? We're down. I mean, we were at 99 in yen. We're at 90 this morning. I think it's somewhere around 94 right now as we speak. But do you see this snapping back today? Is it predicated on the stock market? Do you think what's your
it really could. I mean, it really could. After a big move like this, one person's trash is another person's treasure. So again, someone could see this as an unbelievable point to buy. It really could. Longer term, I think we still have some more bleeding to go through.
Okay.
I don't think we've hit bottom, but I don't think that it's the end of the world either. I mean, that's the beauty about Forex.
Comforting word.
Well, everyone else is reading their 401k statements and are helpless to do anything about it. Being a currency trader,
Make the next trade later.
These are some of the best times ever. I'm extremely happy.
Great. All right, I want to finish up. I want you to tell, your book has been out for a while. I want you to tell our viewers about your book. We get a little gratuitous plug in here.
Oh, sure.
And maybe we can get the jacket cover put up on the screen.
Right.
Tell us a little bit about the book.
Well, the book talks about technical and fundamental analysis. So I didn't sort of invent something new, but I explained exactly the road that I took to become a successful trader. So it'll teach you things like global money flow, interest rates, and
things
what
you
that
were just talking about.
Yeah, but and then it all comes back to currency. So you really need to understand central banking policy, for example, if you're going to be a professional Forex trader. Now, I do cover other things like trader psychology and stuff, but the most unique part of the FX Bootcamp Guide to Strategic and Tactical Forex Trading is I talk about and actually outline a specific strategy for you to improve as a trader. So you can be an expert in technical analysis, you can be an expert in fundamental analysis, but it doesn't necessarily make you a good trader. So I'll outline in the book, for example, how to use trade journals properly so that you can become a better trader. So I outlined exactly what I did in very frank and honest terms, how I went from a lousy trader to a mediocre trader to a much, much better trader.
Right. Great. Well, we certainly suggest you go out and buy Wayne's book. Thank you very much for joining us today. Our guest today has been Wayne McDonnell from FX Bootcamp.